Since the 76th Independence Day in August 2022, India has touched several milestones. With a citizen count of 1,428.6 million, the country overtook China to become the most populous nation in the world. Markets too were in the thick of the action. The total demat account tally in India hit the 100 million mark for the first time in August 2022 and reached 123.5 million in July 2023. Nearly 3 million accounts were opened last month alone. That's roughly 50% higher than the previous 12-month average of 2 million. The euphoria among retail investors, coupled with FII and DII money, took the benchmark S&P BSE Sensex to a record high level of 67,619 on July 20. The Nifty 50, on the other hand, came within striking distance of the 20,000 mark. The mid-cap and small-cap indices, meanwhile, hit fresh highs in August. That said, it was not a one-way street for the bulls since the last Independence Day. Markets turned volatile in the second half of the calendar year 2022 as FPIs booked profits amid monetary policy tightening by the global central banks in the backdrop of rising inflation. Moreover, the Hindenburg report on the Adani Group proved to be a nemesis for the market sentiment and FPI flows. The foreign investors offloaded nearly 29,000 crore worth of equities in January 2023. The selling ran well into February 2023 as Hindenburg saga deepened in India while the global markets dealt with a string of bank failures. The sentiment, however, began to change when the Reserve Bank of India paused its interest rate hiking spree. The RBI held the repo rate steady at 6.5% in April 2023 after raising rates by 250 basis points since May 2022. Globally, the US Federal Reserve too signaled a likely pause in rate hikes amid a slight moderation in inflation. As a result, FPIs have come back with investments worth over 1.5 trillion rupees in Indian equities since March 2023. Against this backdrop, the frontline Sensex and Nifty have surged over 10% since the last Independence Day till August 4, 2023, while the broader indices have soared over 20%. Indian benchmarks have outperformed most Asian and US peers but performed in line with the European counterparts during this period. That said, analysts believe India remains the best structural story across world markets and see the Sensex climb all walls of worries and hit the 100,000 and even 200,000 mark over the next few years. But can it hit or move past the 78,000 mark in the 78th year of Indian independence?
It's very simple. Markets have done phenomenally well. Small caps have done amazingly well. It's been like a vertical rally. I've been very bullish on small caps I've said this on your shows to yourself many, many times. So yeah, I'm very heartened by the way markets have at least delivered on what I thought was a road ahead, whether August or July or November. But we are definitely hitting that number, which is I think 15% away, and that is not a big ask anyway.
Sharma believes that this milestone can be achieved once the central banks begin cutting rates.
The most important thing, rest everything doesn't really matter, is basically the direction of global interest rates. That is definitely one, and direction of Indian interest rates. That's the number two. Rest, politics and numbers, etc. All of those things are rounding off errors. I think broadly the markets will react very favorably to a benign outlook on inflation and therefore a benign outlook on interest rates. And I do believe that sometime later this year, beginning next year, you will start to see the effect of that coming 3%. If large caps do 10-15%, small caps will do, usually that's like 1.5x of those returns, good in a good way or a bad way. So I think you'll easily do like 20% on small caps if large caps return you 12-15%.
That said, Chris Wood of Jefferies thinks it is only a matter of time before the Sensex hits 100,000 mark. He cautions against certain pitfalls.
The market sort of discounting no more rate hikes. At some point, the market will get nervous about the election, right? I think the market has the potential to really rally. Obviously, before the election, there'll be a consolidation, and then if the current government is re-elected with a workable majority, then I think the market then I think the market will really pick up momentum.
In a nutshell, the key trigger to fire up markets and keep the bulls in charge ahead of the 78th Independence Day will be the outcome of the general election of 2024, healthy macros, corporate profit growth, and geopolitical stability. On August 16, minutes of the US Fed's latest monetary policy meeting will sway the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.